Hello, and welcome to another update video about Bitcoin. Bitcoin is sort of hovering around the 29.4k area. Not too much has happened since the last video, really, to be honest, from a price point of view, not much. I would nevertheless expect some volatility still today. We still have a few companies report earnings today. Remember, in the last 2 or 3 days, we had a lot of US companies report earnings. It had quite a bit of an impact on the stock market. Of course, there is some volatility that sort of moves over to crypto, you could say, based on that, because there are temporary correlations. And of course, it affects the sentiment of the traders and investors. However, today, I think what dominates today is going to be a core PCE, so inflation data coming out. You can see that here the forecast is 0.3% for core PCE month over month. And typically when it is below 0.3%, so below what is forecasted, it would typically be good for crypto. And if it's greater than forecasted, it would be, let's say, bearish for crypto or good for the US dollar. But let's see. I mean, the focus has moved away a little bit from inflation data, a little bit more towards concerns that the recession is coming, or basically the recession is going to impact economic growth and wealth. So the focus has moved away a little bit from concerns about interest rate increases, which very much are tied to inflation. So the focus is less on inflation these days, I would say. It's more on general concerns around the entire economy and recession risks and effects of a recession. Just highlighting that because, people basically, or traders, investors, the market basically doesn't assume that the Fed will raise interest rates much more. I think there are discussions around 25 more basis points, maybe 50, but that should be it. Because the Fed knows they can't do it forever, right? This is something that's coming today, 8:30 a.m. Eastern time. Looking at the Bitcoin chart, not too much change. So we still have a situation here where overall, my view is, and I think the best wave count is that we rallied in a wave 1 of the March lows here to the high on the 14th of April. We're currently coming down. This looks unfinished, but we're currently coming down in a wave 2. This wave 2 can unfold in various ways. And I did explain in detail in yesterday's videos, and by all means check out yesterday's video, that it is really, really difficult now in this area to really, let's say, predict, I hate that word, but predict what is going to happen, because I can really give you 5 to 6 wave counts here how this could unfold, also on the lower time frames and the lower degrees. In the most simple form, we would just have here an A wave, a B wave, and a C wave. The B wave could also be finished already, so it could be A, B, C. But my preference would be to get a higher B wave here, highlighted in orange. Within the B wave, we have another A, B, C structure. So again, that might be a bit confusing if you don't know too much about Elliott Wave. But on our second channel, More Trading Online, we have a few basic tutorials. Also, you find more educational material on morecryptoonline.com. Or if you really want to learn about Elliott Wave, then check out our channel membership. We've got tons of educational live streams all around the topic. You can watch all the recordings. But either way, ABC, typically in a B wave, you would expect an ABC structure. Either way, there are of course different ways how we could get there. I always try to, give you an example like, okay, we've got a destination, we go with our car, we've got a destination, but there's of course more than one way to get there. We can take the motorway, we can go through the villages, we can take diversions, there are different ways of getting there. Some things, especially in a corrective wave structure, are just, let's say, not possible to forecast. I mean, they can be forecasted, but the problem that you have in a corrective structure, especially if you deal with an unreliable B wave, B waves are really the most difficult waves in Elliott Wave, generally in the market, because yes, you can forecast something, but then in a B wave, the likely scenarios where you normally have maybe 2 scenarios, they sometimes double, triple, quadruple, to, you suddenly have 5, 6, 7, or even 8 possible wave counts that are all likely. And then, you know, there's no point in saying, okay, I think this one is going to play out. I think this one, because it's pointless, because nobody knows, right? We don't know the future. Best here is to understand, what do we see? What is the key resistance for a high B wave? And that goes all the way up to 32,570. Only above that level, we would have to consider a direct breakout that we're already in a third wave, not in a high B wave, that the wave 2 was already finished here. Okay. But I don't see that at the moment, because we move down in corrective structures, we move up in corrective structures, we move down in corrective structures. So we don't have the imminent breakout setup unless we deal with a diagonal. And diagonals also here, you can't forecast them. A diagonal is something that best approached from a mindset like, okay, there is possibly a diagonal, but don't necessarily expect it to play out, right? It's not an impulse. Impulses make the life easier for us as analysts and traders, but even in a diagonal, you deal with unreliable corrective structures. And then sometimes, from a strategic and tactical point of view, it might make sense just to zoom out to the higher time frame and to stay temporarily, at least, in the more reliable higher time frame. Just be aware of the relevant support areas here between 22K and 26.7. Yeah, these are all levels to watch out for. 22K. 22K, 24K, 25,320, 26,680. They are all definitely levels to watch in this wave too. I can't really give you a clear target for the C wave. The reason is we don't have a confirmed top in place for the B wave. And I want to show you a few ways how this could unfold, because a few people asked me, can you show us a few ways? Because I said yesterday, right, there are like 5 counts I can show you. And yeah, there are around 5 counts, right? And in this environment, what you cannot, let's say, predict, you can manage with tactics. For example, when you know you're in a B wave, you might want to size down. You might not want to have too much risk in there. You might not want to be too much, have too much of a position. You might want to be flexible. You might want to zoom out to the higher time frame. Just, look at the higher degree support and resistance areas that are necessary. Okay, and some people might just want to not do anything. So how can it unfold? Well, okay, if we have this orange wave count, this is the most basic one. A wave down, we can say complete. B wave, C wave. This would certainly be the clearest pattern here. A, B, C. And in the B wave, if we do this, A, B, C, and then we have 5 waves down in C. 1, 2, 3, 4, 5. Nice and simple. That would work. That would be nice. But it then starts to get painful when you can have a high B wave, a very high B wave. So it is possible to have an overshooting B wave here. A, B, but the C wave of the B wave is very long. If we have an overshooting B wave, it creates the problem that, if you know about Elliott Wave, there is a pattern that's called running flat. In a running flat, the C wave, a lot of people would expect the C wave to end somewhere in the yellow support area. And I think that is still a likely option. But if we have a high B wave, we need to consider a high C wave as well. It's just part of that structure, a running flat. Not too frequent, but it is still fairly common in crypto. And it is a fairly bullish scenario, but impossible to predict. So in that case, the C wave would end somewhere up there and then take off in a third wave. That's one scenario. Another scenario I thought about would be, okay, we came down in an A wave. The actual B wave doesn't sit up here, but the B wave actually unfolds as a triangle. That's possible as per the rules. So it could be A, B, C, D, E. Then the B wave will finish here and we come down in C. Yeah, that's possible. What else is possible? Well, then obviously we've got the situation that, hey, this doesn't need to be an A wave. It could be a wave W. W, yeah, this could be an, okay, X wave. No, that doesn't make a difference really. Oh yeah, WXY. Yeah, this is possible. So we would also have a shorter move down. It's just that, okay, ABC in wave X, and then however the move down will not be in 5 waves, it will only be in 3. So see, it is extremely confusing, and that's also why I purposefully do not show you the micro level count. Someone said yesterday, oh yeah, but you can show us the micro counts of the the C wave to the upside in wave B. Yes, but the problem here is, again, what do I show you? It's a B wave, okay? And yes, this move could unfold as a C wave, but it could also be a WXY. So best just understand where the resistance is sitting. Yeah, and it could even unfold as a triangle. So there's no point really, if I add any micro count on here, it will change. It will change. And Elliott Wave tells us, or shows us, and that's the benefit here, makes us understand that we are in a correction, that we are probably in a B wave. And that tells us, don't try to predict every little wave, don't try to trade every little wave. I mean, you can try that, but the truth is, trying to trade every little wave in a correction is foolish for most people. It can work, you know, but the reality is most people will not do it or fail. Yes, because it sets you up for failure if you try to trade every single wave here. Now, in addition to that, of course, we have just aside of the Fibonacci support and resistance levels, you start to have a nice range here. We obviously have support, structural support here around 27K. And at the moment, structural resistance here around 29.8K. So I don't know how long this is going to go on for, but you know, as a range trader, you might want to try this. But note that there's a high chance of breaking this. With the aggressive moves we have, things can move very quickly here. But then again, that brings me down to adequate position sizing, okay? Of course, this can all be traded, but in these markets here, if it's sideways, there's a higher chance of breaking and failing. And that's why smaller position sizing might be the way to go. Because you can basically, I don't want to say risk more, you risk less. And you will be less emotional about the probably quite frequent breaks of support here. All right, that's my update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.